Okay, M's and W's time. In today's episode, we're gonna go over what M's and W's are. What is a good M? What is a good W? And yes, this is an overcomplicated term for a breaker structure. However, it really does help visualize what is a good and what is a bad trade. So today's episode is gonna be a little bit different. What we're gonna do is we're gonna go to random times at 9:30 in the morning or like 9 in the morning, and then we're gonna actually trade. So I can show you what is a good and what is a bad M. And we're not just gonna trade New York. We're gonna trade throughout the whole day, so that we're gonna focus on New York, but we're gonna trade throughout the entire day, so that I can show you that there are other opportunities out there. Okay, so let's start with that. Pulling up the chart. Make myself a little bigger, bro. Fucking main character vibe. Anyways, so what is an M again? Just to recap, what is an M and what is a W? An M is when we're looking for shorts. An M is where we see a high and a low get made, and then we can either see a higher high or a lower high. That's perfectly fine. But our confirmation is the lower low. Ideally engulfing. What is engulfing? Engulfing means that the candle has to close below this low in order for the strategy to be valid, okay? And then for W's, the exact same thing. We come down, or we're reacting off of something, or whatever it is. We make a low, we make another low, and then we see a closure above the high, confirming the breaker structure, confirming the W, again, ideally engulfing, and obviously ideally with more confluences behind it. So let's get into some examples, and let's try to use all the concepts that we've been using in order to be successful traders. So let's go to, we'll go to a random, I don't want to go random bar, so I'm just going to choose a random date at 9. So we can do that. So let's go boom, 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 right there. And again, this is super random. I'm going to do another date after. It doesn't really matter. So let's get into this and let's see what we're working with. All right, first things first, always we go to the 1 hour. Let's analyze this market. What is going on here? We're clearly in a range. Okay, we're clearly trading within this large range. However, we're seeing that the market is moving up. We're disrespecting bearish or rally gaps right here, and we continue to respect bullish rally gaps like right here. Therefore, my objectives, remember previous episode objectives, would be these highs as a final objective, because I don't see any other high that is reasonable. Again, always work with reason. So let's do that as our final and only target. Perfect. We have our idea of what's going on. We're in a bullish uptrend. Seems pretty easy to me. Now I'm going to wait for the market open. So let's trade to the market open. And there we go. Market opens. We go lower initially. That's perfectly fine. And what do we see followed by that? We see what appears to be a rejection from a low. Let's see if we now form some type of, okay, perfect. Now we have an opportunity right here. This is a little bit preemptive, and this is like before the opening range move. However, if we see a trade of this style, I would be perfectly fine with taking it. So we'll leave it out here just in case it does happen. Let's see how price is reacting. Let's see how price is reacting. Let's see how price is reacting. Perfect. We're seeing a lot of bullish confirmations here. Okay, not the best entry. Let's wait and see if we have another opportunity. We're clearly reacting off of this whole imbalance right here, which is probably an hourly for value gap or 50-minute or 30-minute, as we can see right there. Could you have entered up here? Yes, you could have, because we did flip this 1-minute gap right here. However, it is a little bit of a risky entry. It's not the best entry just because this, again, I don't want to be break-even immediately. I want to break even that makes sense. And this could also bring us a little lower. Therefore, it's not the best entry, but we do have a very clear formed W in this case. How do we see this? Let's look at the lines. I mean, you could just see it yourself. The W is right there. Obviously, yeah, we did close above this. So it's not the best W, but it's still a really good W in this case. So there you go. There's a perfect W candle right there. So let's make that path so you guys can see. So down, we made a move up right there. We made a move down right there. And then we made our move up, well, in this case over here, but let's just say it's over here. And you're going to say, oh, why don't you enter as the candle is live? I don't want to take a trade when the candle is live because it doesn't confirm. I don't want it to be like that. And honestly, what I would do in this scenario, if I was really this convinced that we were going to go higher, I would hope that price comes down into this range and I would place a limit order. So why don't we do that, see if that works. Let's place a limit order there, see if we get tapped. Okay, perfect, we get tapped. Do I like this? Not anymore, to be honest, because we did sweep internal highs. But just for the purpose of the video, let's see what happens if we were to be taking this trade. If we maybe had to wait for, you know, other type of confirmations to happen before we take the trade. Let's see. Yeah, as you can see, wasn't the best trade. Why? Because we took out the highs. Okay, so it's fine. It happens. It's gonna happen. You know, this is why I didn't like this trade, because it didn't give me the confirmation. The clean M and W that I want to see would be right here, for example. I can see it. I can literally see it. We make the move down. We make our high. We make the move down. And then if we can get a closure up here, inverting this gap, I would almost guarantee you that if you place a trade right there and put your stops down there and put your take profit up there, that it would hit. So let's see what happens. Do we get the opportunity? Maybe. Bang, right there. There's your entry. This seems like a very, very, very good, very convincing trade right here. I would 100% take this trade. This would be my trade for the day. Now, let's think about this risk management wise. Where do we want to go break even? Well, at the same place that we reversed, right up here. We can go break even up here, or if you want, we can go break even all the way up here. That seems a little bit less likely though. So let's just call a break even right there. Let's see what happens now. We're clearly disrespecting bearish order flow, so I can expect price to continue higher. And if it doesn't, then that's okay. We could be wrong. Okay, in this case, it didn't. It's perfectly fine. Not the best market conditions. You can see we didn't really go anywhere. Not a big deal, okay? Not a big deal whatsoever. But we were able to recognize a clean M and a clean W, okay? That's how it works. That's basically how it is. You just trade in the direction of price. Okay, we saw the opening range move, we saw where the M was formed, we saw where the W was formed, or sorry, in this case, two Ws, and we just trade off that. It's as simple as that. That's how you recognize Ws. Now, is this, let's go to the lines here again. Is this an M? No, absolutely not. Is this an M? No. Is this right here W? No, because there is no reasoning behind it. This right here has a lot of reasoning behind it, has a lot of, you know, conviction behind it that we do truly want to go higher. In this case, it didn't work out. That's fine. The market can be, you know, not the best. We did also see a pretty large extension overnight, so for us to see continuations higher would be a little bit difficult. So we do have to take that into account. However, that's perfectly fine. You know, it is what it is. Can't do anything about it now. Let's see what happens with the market. Okay, seems like the point of reversal was at this level. And do we have another opportunity? As of now, I don't see another opportunity. I would like to see us come down into here so we can make a prominent low and then we can continue higher. Let's see if that happens. Okay, that seems like a better prominent low. Perfect. Okay, I'm seeing a prominent low now. We're reacting off of this. If we see this bearish order flow get disrespected, I would be okay with taking along here, even though it's not the best, even though it's not like the most ideal. We didn't close above it, so we can ignore it. Boom. I would say, honestly, I would say that this is not a good trade just because we don't close above this. If we had closed above this, I would say that this is a very clean W. Let's see what happens. Let's see if this is the right trade. Yeah, it looks like we were just consolidating. Doesn't look like the trade wants to go anywhere. We don't really want to get caught in all this junk is what I would call it. Therefore, we can now move on to the next day. So again, the best M's and W's are going to be in that kill zone of like 9:30 to like, or sorry, 9:45 to like 11 a.m. at the latest. And I would say even on like 10:30 is already kind of late because, again, your M and W is going to form in the beginning of the move. You ideally want to be out of the trade by 11 in the morning. So today didn't work out. Let's go to a different date. Let's go to, let's go again 9:30 or 9 a.m. so we can see the hourly. Let's go. I'm going to close my eyes. So boom, boom, and then I'm going to choose right there. Okay, the 20th right there. Okay, so let's see here what happens. It is January 20th. We see a pretty clear move down. We take out all these lows. We're reacting off of this. We are in a bearish trend, and we are respecting what would be this clearly 4-hour for bearish rally gap. Therefore, I want to say that we're probably bearish unless we see us trade outside of this range right here. That's what I would say. We have our targets for the lows right here. We have our target for the highs up here. Now let's wait and see for the opening range move, and let's see what happens. So we wait. Market opens. Okay, cool. We're very much bullish. Let's wait for the, like I said, let's wait for the opening range move. Very much clearly going higher, clearly intention higher. Okay, we're not seeing the best price action right now. We're consolidating. Okay, we have a clear, we now have a very clear opening range move that we want to continue higher because we're disrespecting all the bearish order flow. We're seeing continuations higher. Therefore, I want to wait and see what happens. Now, okay, perfect. We're making a retrace. We're making a solid retrace here. If we truly want to be bullish, I would need to see a closure above this now. And this would form our M right there, or our W, I mean. So we don't get anything. There's nothing to take. We're reacting off an hourly gap. Are we taking that? Not yet, because we don't have a clean confirmation. This isn't clean price action. This is actually really bad price action. But let's see if we can still capitalize off of it. Not ideal at all. Not ideal one bit, to be honest. It looks like we do want to continue lower, but there is no... Oh, what is this? Big move up after sweeping lows. Let's see if we now get continuations. Okay, no, not yet. We don't have anything yet. Nothing. Okay, there's... Unfortunately today there's nothing to take. You know, you're not going to get a trade every single day. Looks like this could have been a decent trade right here, but it's way outside of the range. Like, it's literally at the limit, and it's kind of like not the best trade. It's like a 1-to-1. I don't even think it would work out, but we'll see. You'd be break even, and you would get break even because you'd go break even at this high. Not a good day again. Nothing I can show you, but there is a lot of M's and W's here. I mean, look at this line graph. Is that a W? No, because we don't have confirmation. Again, you need at least 3 methods of confirmation, whether that be a sweep of liquidity, a fair value gap reaction, or an inverse fair value gap, ideally a BPR. You need at the minimum 3. And then the fourth one would be your options are the following, and I'll write it down here. So if you guys actually do want to know, your options are the following. Your options for confluences are inverse fair value gap, engulfing closure, fair value gap reaction, sweep of liquidity, SMT. If you have 3 out of 5, then you are chilling and you can take that trade. But if you don't have 3 out of 5, then you cannot take that trade. Okay, so I'm going to copy this, and we are going to go to a different day, and we're going to follow that to see if that, is going to help us win a trade. Again, let's just go back to last year. Let's go to like December 12th. It's a Friday. Fridays aren't ideal, but we'll go to the Friday anyway, just to show you that, I don't really care. So we go to the Friday. Let's go to the hourly. Again, our checklist, I'll paste it in a second. What do we see immediately? We're in a range. We have this bearish hourly gap right here, which would either bring us lower or higher. Right now we are in a downtrend, and we do have objectives lower. Therefore, I'm going to lean bearish until I see a clean opening range move. We have these as objective highs, and then this if you want to take it all the way up there. So let's see now what happens during the market open. Let's see. Market is going to open there. One more candle. Okay, looks like we swept this internal low right here. We are reacting off of these gaps. So now I want to see a clean opening range move, and let's paste the confluences. Yeah, so these are our confluences, so we don't forget about them. All right, boom. Let's go to the 1 minute now, see if we get a clear move. Now, I'm moving in the 1 minute here because I just want to show you guys like as active as price action as possible. But obviously I would be looking at the 5 minute too. It looks like we're making a reversal here. It looks like we do want to continue higher. We did sweep this low. We don't have any clear displacement right now. If we make a retrace down and then, okay, never mind, it's not going to happen. That's fine. That's perfectly fine. Okay, this is a good retrace. Now, let's see if we can make some bearish moves or like a bearish confluence. Perfect. Now we have a 1 minute bearish value gap. What do we see? We have sweep of liquidity. That's one right there. Inverse value gap, if we take this right there. Finally, we can get either an engulfing closure, an SMT, or we can use this reaction of this value gap all the way back here. So let's see what happens now. If you truly want to be bullish, we will see moves up. Okay, it doesn't look like we want to get them. It looks like we just want to continue lower. Therefore, it's fine. We're not changing our bias yet. There's nothing we can do right now. We did sweep these lows. Let's see if we now have some type of bullish moves. Looks like we do. Perfect. I want to see us retrace into here and then form a higher high. Okay, that's not the best retrace, but it's not the worst. If we get an engulfing closure, then maybe we can utilize it because it is 3 confluences. That's fine. See, this is why we don't do this. And as a matter of fact, I'm seeing now a short. How, you may ask? Well, let's look at the 5-minute. We don't have a fair value gap on the 5-minute. Let's look at the 3-minute. We don't have a fair value gap on the 3-minute. 2-minute, I don't think it has one either. And the 1-minute. Okay, so there's no fair value gaps. That's fine. What do we have? Inverse fair value gaps. What do we have? Engulfing closure. And then what do we have? We have, in this case, a sweep of liquidity up here. So that's our third one. And clean structures. This is a very clean structured M right here. Therefore, I'm willing to take this. It's not the best trade. Tell you immediately because I know it's a Friday and I know that price action isn't the best. And it also is at 10 a.m., which isn't ideal. But it's a trade that could play out. So let's see what happens. Boom. Looks like we're playing out. Let's put our break even at these lows. This is perfect. See if our break even gets hit so we can be risk free. Risk free right now. And let's see if we can get our final target get hit. Boom. Just like that, you get yourself a 1 to 2 RR trade because we adapted and because we recognize what is a good and what is a bad M and W. Okay? You could have said, oh, wait, but this is kind of an M right here. Yeah, but it's not though. It's not though. You don't have the engulfing closure. You have this gap up here. You have very clear bearish structure. You don't have a shift of structure. You don't have, a clear high being made with a following high being made that's higher after that, causing your W to be really good. The slanted W like this is better than the one that's like this. And the same thing goes for the M. The M that goes like this, that is slanted, so this is an engulfing closure, is better than the one that doesn't have the engulfing closure. I think engulfing closures are one of the most important, if not the most important aspect of recognizing good M's and W's. Okay, let's do one more day here. I don't want to keep you guys with infinite videos. And I know this is kind of confusing. If you want to see more in detail, more examples on different sessions and different assets and everything, there is another video about this. But I just thought I would tell you guys, what is a good and what is a bad M and W. So again, let's copy our confluence list. Always write this down. And we can remove these drawings. And let's go back to another random date. Let's go to November. Let's go to November 7th. Again, another Friday. Fridays are some of the worst price action days. Let's see if we can see a good trade on Friday. First thing we're going to do, again, we're going to recognize our profile. Are we distributing? Are we consolidating? Where are we going? What are our objectives? What are our confluences? What do we have that is telling us, okay, we want to go here, here, here. We have bearish objectives right here. We have bearish objectives right there. What are we seeing from overnight price? We disrespected this fair value gap right here. And so I'm going to be bearish. I want to believe that we are bearish. And at the same time, we have what I would call a stack of fair value gaps right there. That's clearly an area of imbalance. We do have bullish objectives up here and up here in the case that we do want to actually flip. And we do have these 2 large hourly gaps right here that we might want to fill, but we'll leave that for later since we're trading all the way down here. Perfect. We've recognized where we want to go initially. We're in a downtrend. I want to see that continuation of downtrend with the opening range move. Therefore, let's wait until the market open. Market opens. Market open there. Yeah. Let's see where we want to go. Okay. Looks like we took the low immediately. We couldn't catch that move. That's perfectly fine. Now, are pre-market M's and W's good? Yeah. You'd have to see something really good. Like, for example, is this a good trade right here? And I'll explain. It is. This is a good trade right here. It is a good trade, okay? Don't get me wrong. It is a good trade because we do have an engulfing closure, an inverse value gap, and then a very clean formation. But you're kind of gambling against the market open. So that's why I don't like doing it pre-market. If it's London, for example, if we go all the way back here, I'm just trying to see if we have anything. Let's go to the 1 minute because that's where I try to find my entries. I don't see anything. I don't see anything like overnight either. I don't see anything that's super clear. I'm not gonna lie to you guys. I'm not just gonna sit here and like lie to you. I guess here's the cleanest M formation, which would be like at 4:20 in the morning, where we have a sweep of liquidity. We're reacting off of this imbalance range. We made our move up. We made our second move up, and then we have an engulfing closure down here, allowing us to take a trade of this kind, something like this. And then you can target, you know, like a 1 to 2 or whatever you want to do. Boom, just like that, your trade is hit. So that's a good M right there. I'll mark it out so you guys can see. See how it has all the confluences? It has a sweep of liquidity, whether that be internal or external. It has a reaction of a fair value gap. It has an engulfing closure, and it has an inverse fair value gap. This is basically perfect in this case. Now, is it going to work every time during London? I'm not sure because I haven't backtested that because I don't trade London. But if you do, you can do that yourself and see if it works. I guarantee you that you will find some good results. Okay, let's go back to New York Open. Let's wait for another 5 minutes for our opening range move. We're clearly bearish here. This is very obviously bearish, and this is perfect. Why? Because our opening range move, which is in 2 minutes right now, so 2 minutes, is telling us right now, what are we? We're bearish. We have these gaps right here, protecting the bearish move. Now, do I need to see an engulfing closure above all of these? No, absolutely not. As a matter of fact, I see a really good long and I see a really good short because we did sweep this liquidity right here. So what we can see is we have our move down, we have our move up. If we make a move down and then an engulfing closure move up with this inversing this gap, I think that's a valid long. Now, for the bearish move, we're making a really good setup too, which is, this is why I love the strategy. You can literally set up for both sides. We made our move up, we made our big move down, we made a move up here. I would want to see us go a little bit higher ideally and form some type of bullish, you know, for value gap or something like that. But if we don't, that's fine. And then if we have an engulfing closure below this, then I'm going to take shorts into this final objective. Why? Because then we have reaction of a fair value gap, engulfing closure. And then in this case, we have very clean structure. We don't have an inverse fair value gap in this case. We don't have an SMT in this case. But what we do have, and let's go take a look at the checklist again. So we'll paste it over here. What we do have is, and I'll add it to the list actually, is clean structure. And this unfortunately comes with time and experience. I can't tell you why this is clean structure. I just can see that if we close below this with a clean structure, I will take the trade. So we have a setup for both long and shorts. Let's see what we want to do. Okay, perfect. Is this what I'm going to enter? No, because this could easily be the best point of reversal for our longs. So let's see what happens next. Okay. See, this is what I'm talking about. Now, is this enough? Not necessarily, but you could argue that this is a good trade. I'm going to wait for one more candle. This is why we wait for another candle, as you can see right there. Okay, it looks like we're just consolidating. I want to see a little bit better market structure, so I'm not going to be taking anything. Okay, there we go. What do we see? This isn't great. I'm not going to rate this an A+ setup. This isn't the best, because if it was an A+ setup, we would have seen it before. We're entering here because we flipped this fair value gap right here at the closure. We have a sweep of liquidity, we have clean structure, we have an engulfing closure above these highs, causing a new high, so that if I go into the line, you can see that it creates a new high very clearly. And we have an inverse value gap. Therefore, I'm okay with taking this trade. I would believe that this could be a point of reversal. And I will put my stops not at this low, but at this low, because if I am wrong, I want to see a short setup play out. So let's see what happens in this trade. Let's just take it for the lows. Sure. Let's just take it for the lows. See, because I know you guys love P&L. Let's see what happens. Okay. Now, let's see what happens with this trade. Are we going to win or are we going to lose? Again, we are trading against a 5-minute gap right here. But why am I taking this long? And then, what does this mean? That once we can see a clean closure above this, I'm going to go break even because I don't want to see any reactions out of there. We could easily see reactions at any of these points, so I don't want to take a chance. See? Just like that. I probably, maybe not, I would have been break even, but let's see how this plays out now. Because look, we're setting up for a good short right now. So let's see how we want to play this out. As you can see, it looks like the short is playing out just like that. So In this case, break even would have been hit, because of this 5-minute gap that we did have, that we tapped perfectly. Therefore, you would have gotten break even. And that's perfectly fine. Also, one thing I wanted to add, and I probably should make a video about this. I don't know if I will, maybe in the future. 10 a.m. is scary. 10 a.m. is very highly volatile because it's a new 4-hour open, and you want to take your trades ideally outside of 10 a.m. because look what happened right here. 10 a.m. jumped from up here all the way down here. 10 a.m. sent us lower. I guarantee you there are probably news at 10 a.m. So I definitely would have gone break even given that there are news at 10 a.m. But again, this all comes with experience. Like I wish I could teach you guys everything I know in like the best way possible, but I can't unless you just live it. You have to live it to understand what I'm talking about and what it means. I'm giving you all the technical stuff. I'm giving you the book, the knowledge, but you need to apply it. You need to be there the same way that I was in these charts for years and years and years, every single day. I didn't miss a day. That's what you have to do. And when you do that, you'll understand the things the way I do. And you'll see it. You'll see the trades without even marking anything. You'll see the trades without even marking anything. Okay? In this case, yeah, okay, we don't really trade anywhere anymore. That's fine. It's probably just because of the news. It's not a big deal. Perfectly fine. Look, a short setup would have worked. But I didn't see it. And you have to like feel it. You kind of feel it. You feel it in your bones. You're like, oh, okay, this is going to be good. Oh, I see the setup. I see it. I see it. I see how it works. I see how it is. Okay? I'm going to leave it at that. It's already a long enough video. Again, if you want to check out the other M&W video, I think it might be a little better than this one. I think that what you should take out of this is the confluences that you should be using. That's the minimum that you should be using every single time. Put these all into action. And again, yeah, that's all I got to say. Discord for free down in the description. I stream every single day. If you want to watch me trade, you can ask me questions, anything, and I really would love to learn how to teach you guys better. So if you think I could do this video better, or you think I should do it again, please leave a comment down below. It would really mean a lot to me if you just gave me your honest opinion about the video. If you understood it or you didn't, that's perfectly fine. I'm not going to take anything personally. Okay? Get cooking. I'll see you guys in the next video. Next video will be the psychology of winning and losing and then entering trades. So I guess I gave you guys a little bit of a spoiler there. All right. I'll catch you guys in the next one. Peace out.